The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Good day, traders. Mindset reset and a technical video. We're going to be talking about Forex pairs closing in breakout, major currency pairs when they close in breakout, front side, back side of the week, how they can potentially help us identify an opportunity in the session that we're trading, and also how to use that to look at the cross rate pairs for signal days if and when they present. Now, the most important part of the daily routine is the daily process of filtering a basket of instruments to identify the ones that could be offering scalable parabolic trading setups. The number one reason traders miss opportunities is they actually don't follow a daily process. They put up a bunch of charts and they flip through charts looking for what they think might give them the best candidate to catch a high, catch a move, get a trade, but they actually miss the bigger, scalable, parabolic picture that can present if they understand where traders are trapped or where a market is coiling to potentially go on a range expansion. The behavior of the trader is inconsistent. They don't understand scalable trading setups. Instead, they just want to get trades every day and they miss out on the larger scalable opportunities. One scalable ACB trade is worth 50 trades, where you have a 50-50 chance of catching a move, being in the right direction. It's unscalable. And those wins and losses over time, traders are convinced that that's normal, that you should only risk 1% on every trade. But when you have a scalable opportunity that's driven by other time frame traders where it's virtually 90-10 and a market is coiling to explode, those are scalable and repeatable, and they can be done with size. So those compounding scalable trade setups blow away 50-50 trades, taking trades, trying to catch moves where traders really don't understand what they're doing. They win some, they lose some, but none of that is really scalable and repeatable. Today we're going to look at specifically the Asian session. Now, the Asian session is something that I trade when there's an opportunity, front side or back side. And as I've mentioned before, one of these opportunities a week, whether it's on the front side or the back side, rinse and repeat frequently, and they offer traders significant opportunities to compound their account. In the Asian session, we can just take the basic model is just skimming through Forex pairs that close in breakout. Now, for the Asian session, obviously the Japanese yen, the Aussie dollar, and New Zealand USD are three main pairs that are obviously going to be traded heavier in the Asian session. Now, often if one or more than one of these pairs closes in breakout, we can then skim through the cross rate pairs to see if any of those identify with a signal day, a 3-day setup, first red day, first green day, inside day, or 3 days of breakout traders. Now, depending on where these show up, front side or back side, we can have parabolic opportunities for either trend trades or reversal trades. Now, I want to repeat, these are 3-day setups. They're the ones that offer the scalable opportunities. First red day, page 58 in the playbook. First green day, page 64. We've talked about the inside day. Now, these are rinse and repeat setups. Setups, rinse and repeat. This is one of the most important things I want you to get out of this video. There is no such thing as a trap. There is no such thing as a trap. Only a trader that doesn't know what the setup is. So when traders call this, they say, oh, it was a trap. There is no such thing as a trap. You either have a setup or you don't. And when I repeat the phrase, what setup have you mastered, you will realize the importance of that statement. When traders say, oh, that was a trap, it didn't work, that means you're trying to trade a move. You're trying to trade a candle. A setup is something that rinses and repeats based on specific criteria. We can have markets that break out, consolidate, and trend in either the long or the short direction. We can have breakouts that consolidate and reverse, either in the short direction or the long direction. And again, we've talked about first red day, first green day But most importantly, when markets break out, that's a signal. Now, Monday, day one, the opening range of the new week, we had the Aussie dollar closing in breakout at the low of the month, the low of the week. And that market reversed strongly in the Asian window up to where the original breakout occurred and the low-hanging fruit trade in the U.S. session was. But most importantly, when the market closed in breakout for Asia session traders, we had a very similar closing breakout with the New Zealand dollar. Again, Monday, day one, the opening range. And we also had the Japanese yen closing in breakout. So all three of the Asian pairs have all closed in breakout. Our New Zealand yen cross pair gave a first green day signal, Friday peak formation high, Monday peak formation low, coiling into the first green day setup. That's a day zero template heading into day two on the front side of the week, which typically expands the range. Day zero, page 84 in the playbook, a 3-day parabolic trend trade setup. Now, we've talked about the closing range Friday. Monday, day one is the opening range. Tuesday, day two typically expands the range. So we've got our front side escalator, elevator. If we can find a 3-day setup, we can look for a coiled parabolic opportunity. The Aussie yen was similar to the New Zealand yen, a first green day setup, peak formation high on Friday, peak formation low on Monday. The coil sideways on top of Friday's closing price, the dump day, consolidation, and the parabolic coil for an ACB opportunity in the Asian session. Peak formation high, peak formation low on top of Friday's closing price, where all the auction process starts from, higher highs on both pairs, and the dump into closing price level and reversal for the explosive parabolic move back through the high of the week on day two. Now, often when we get a range expansion on day one, a large range day, and it splits, or we have this close and breakout, it's an opportunity for us to look for the best candidate for a parabolic trade, whether it's a trend trade or reversal trade. Now, we had first green day signals on two of the cross rate pairs. We had reversal trades into the breakout on both the Aussie and the New Zealand dollar, back into the breakout and the low-hanging fruit short trade from the U.S. session. We go to our 5-minute charts. The basic model for trade entry criteria, page 29, applies for any one of those opportunities. I myself like the cross rate pairs because I like to look for 3-day setups. The first green day is a 3-day setup that's offering a scalable reversal back through the high of the week. Other traders may have liked the low of week reversal. I like the idea of clearing out the high of the week with the idea that it's potentially going to break out and not let shorts that are caught up higher or have had their stops hit, it will not come back and allow them to get out of a losing trade. That's just my thought process. It doesn't really matter, but which one do you resonate with best? I think the 3-day setup is a scalable opportunity. The low of week reversal, if the market's going there anyways, it doesn't matter which one. They're both going to go with other time frame traders driving those moves. It's most important that you know how to execute, manage, and lock in the profits, and which one you resonate with the best. Most importantly, though, understanding that the session that you're trading is looking for major currency pairs that have closed in breakout and any potential cross rate pairs that are offering signal days, whether that's Asia, London, or New York. Keep it simple. No science projects. Keep it simple, traders. Rinse and repeat. Scale them up in size. 1 or 2 of those a week in any session are enough to significantly compound your trading account. Stay focused, stay disciplined, keep it going and keep it growing. And may the markets go with you.